Okay, let's see. Do we want music? Mm, Just testing out the stream. Enable DVR, analytics. Okay. So start my back testing. I guess it's recording. So we're live now. I'm gonna trying to be more diligent about back testing, and I think that doing these streams could be helpful for me to commit to that, but also help other people that are, trying to learn trading. And so, yeah, I'm gonna sit back here, back test a little bit, maybe play some music. Don't know how long I can do this for today. To run some errands later on today, so I'm just waiting a bit. So hopefully everybody can hear me all right. I will review this video once it's done streaming to make sure that, you know, it's in good quality. I do plan on going ahead and live streaming my trades in the morning. So this also is going to test that out, make sure everything's working well. So to get started, if you aren't familiar with ICT methods and his training, he's on YouTube. I'll be trading that system, um, back testing that, and then trading that live in the upcoming week. So there was, I emailed TradingView support, and it seems that they have this new feature about more intraday data in bar replay. However, it doesn't seem to work for the continuous contract, in this case for the S&P Futures. So I believe they said I have to use something else. I'm going to try that out because I'm looking for the 1 minute time frame. And if I just go to switch my regular charts, they're kind of naked. That's how I like them. That's how ICT teaches. So if I go back, as far as I can go back, looks like at the bottom there, it's January 15th. So I'm going to try QQQ. That's not going to have pre-market, is it? Let's see what we can do here. I can go back as far as 2023. Oh, I can't go back. So let me try QQQ, see how that looks. NASDAQ, the 1 minute. Or not QQQ, sorry, SPY. And if I go to the morning open, yeah, it's not going to have pre-market, so that might mess us up a little bit. Extended trading hours, let's see how that looks. It's got some data, it's a little wacky. But it's got some pre-market data, especially that 8:30 news play. So my kind of kill zones that ICT calls it are, if I look at the 15-minute time frame, from New York Open, so New York Stock Exchange Open, 9:30 a.m. And I will do a lunch time after lunch trade, so after 1 p.m. Eastern time. So we'll just try this, and I'm kind of curious to see how far back we can go with SPY data. I'm just going to set this back, like, I know it can't go back this far, but just see what it says. All right, it's December 27th. Not a huge improvement, but a little bit better. So what would that be? Yeah, I guess it's instead of 3 weeks, data, we have about double that. So let me try SPX. That is a CFD. There's another one, isn't it? It's like a US 500. Yeah, I think that was it. Currency.com. Let's check this out. 5 minute. I think this will work actually. Yeah. Okay. So we'll back test with the US 500 to 1 minute and see if back we can go. Oh, still January 15th. Let's see how far back we can go with 5 minute. Let me check my email again. Because TradingView gave me this. Oh, 1 second. One second. All right, sorry about that. I had a visitor. Okay. Please note that continuous symbols are the exception for extended replays. So we could play the continuous contract for different years. We can try this guy. Okay, let's try that. So what happens if I do ESH 22? This goes all the way. Okay, this is awesome. Let's do 1 minute data. Let's see. ESH. ES. I always forget the codes. So let's do summer 2022, ESM 2022. And some 5 minute data here. 15. Rewind. Seems pretty okay. Here we go. I don't know exactly what the first date would be, so I'm just going to rewind like this. See what happens. Now I'll do bar replay, and then we can start backtesting. Let's see. I do want to get 1 minute data and just cycle through the different time frames as I look for my setups. The daily might be a problem too. Okay, so it looks like we can go May 22nd. So ESM 2022, May 22nd. That looks pretty good. So bar replay. Now what happens if I switch to daily? Okay, great. We can work with that. Doesn't look too bad. As long as it's recent data and I have about 60 days worth, that's all I really need to kind of work with. Let's look at weekly. Okay, weekly's not bad either. All right. So what day do we have? What day are we starting with? Sunday. So let's get the Sunday open, or the Sunday open. It'll be Monday at midnight. I need that piece of information. It's usually what I work with when I'm trading normally. So I'll just put my cursor there and go to midnight. And this is what ICT calls the real open. So I have right here the midnight open. I'm just going to project that out to about noon, because that's when I'll stop trading for the morning. And it's kind of when I find that value irrelevant. And then we'll have the 9:30 open when we trade. So we would be waking up in the morning and then getting ready to trade and making decisions right at 9:30. So I'll do 9 a.m. It's like a typical time when I'd be looking at the charts, getting ready. So there's 9:10 right there. All right, so now if we look at this, midnight open, it's Monday morning. Let's look at the week. The first thing I do before the day even starts is I look at the weekly, and I look at where we might expand on the upside or downside for the week. So it looks like previous week we swept some lows, and then we took over these highs and filled in this volume imbalance. Wicks are pretty important with ICT. He calls it consequent encroachment, which is basically the 50% level for the week here. But let's look at previous month highs, previous month lows. And so we would have to say this was the monthly high. So previous month high. Month low. Style. I don't like white. It doesn't print very well. I will print my my back tests and charts. I want to make some templates here so that I get a consistent charting. So what I'll do here is right click and I will set it as a template. So I'll call it, previous high. Template, so there's low. Do the same thing for the weekly. Previous week high. Previous week low. Save templates for these. Okay, now that I have all that information, I'm going to go to the daily. Kind of want to look at this a little bit and analyze it. So, yeah, the previous week we swept the week lows there. We had it up, filled in this volume balance. We have a double two areas here of sell side liquidity. I'm sorry, buy side liquidity. So those two equal highs kind of spell to me that this could continue with expansion to the upside. We have a weekly order block here too. As you can see, there was a pivot low put in. We came up, we slammed through, and that would mean that these two bars here would represent, these three bars here would represent an order block, the ICT methods, and a lot of times price will gravitate towards the midpoint of an order block. You also have balanced price range here, so you have a fair value gap between these two candles here. I could draw that out. Between here and here's a fair value gap, and then there's another fair value gap here. You take the smaller range of the two, or you kind of average them out this way, and you call this a balanced price range. So, I mean, I don't remember the price action from last summer to the tick or anything like that, or what it did exactly. So I'm just going to assume that, or you guys can assume that I don't remember what price did. I'm just using ICT's methods to kind of draw a conclusion on the weekly expansion as I look into, like Sunday, like today, what I'm going to do, we could do it later too. Look at what I expect for the week coming up. But with backtesting, I kind of want to hone in on that skill. And right now, we had a strong move up, so strong kind of rejection, I guess you'd call it, off of these lows, and we have more reason that I see to go up higher and leave this swing low intact to attack sell side liquidity. And so, yeah, with this balanced price range and this order block about 50% level and these equal highs, I expect price to continue up higher. So we definitely filled in this volume imbalance the previous week. That could be an area we trade back into. If you're familiar with the power of three with ICT, if we do expect it to go up, we could see, obviously, every candle has an open, a low, a high, and a close. We could see it obviously open here, depending if there's a gap or not. Then swing down low at some point in the week and then expand higher. Don't know when in the week that happens, but Monday could be the day where it dips down a little bit and kind of reprices in this volume imbalance before it moves higher. So let's look at the daily. So in the daily, looks like we end Friday with a strong move up. Let's go look at the week. Are we looking at the right week? Yeah, 523. Okay, so the daily, Okay, great. We have a huge volume imbalance here that wasn't really encroached into last week. So it gives me even more conviction that we want to move up higher. So I'm going to draw out that volume imbalance here. Draw that forward. This we don't need anymore. We already got our bias. So we could actually see it attack previous. Do I have that right? Previous week lows are here. Why was doesn't make much sense. All right, let me move these. So previous month low is really irrelevant. This is our previous week low. Then we have a volume balance. We have what looks like an order block up here. Previous week high is actually not here. It was here, so I think we're going to attack, definitely going to attack previous week high. I will mark this wick, so there's something called consequent encroachment I mentioned. And if I draw a fib on this guy at the 50% level, we can expect to see price use that area as a strong rejection point. So I'm going to go ahead and move the coordinates for that to consequent encroachment, which is at 50% fib level, 385,350. Get that 385,350. There we go. Okay, so that could be a strong area of resistance. I also have a bunch of indicators on kind of a mirrored screen, and this helps me just quickly identify fair value gaps, but it's looking at a different the back tested one. So actually we'll get a preview into the what the week looks like. So maybe I shouldn't use this tool. Try to spot them manually, but yeah, we can see expansion to the upside. I was pretty much right. After we fill in, we have a volume balance here. It just helps me spot volume balances and fair value gaps and stuff that I missed. This has inside bar type of days that I tend to miss. So yeah, okay. So I cheated myself there by getting a sneak peek into the week. But we have another volume balance here. So we kind of know what price is going to happen, how price is going to react already. So let's go into the 4-hour. I don't do too much as far as premium and discount. Hasn't really helped my trades too much. What's really helped my trades is a identification of higher time frame order blocks within the 4-hour to 15-minute order blocks, breaker box, fair value gaps. Obviously, equal highs and lows are pretty easy to identify. Like these here would be a great target if we dip down. But yeah, those have been very helpful. And then in the morning, kind of get an idea and draw liquidity after the first few minutes. So obviously, if it seems like it's attacking the downside and trying to fill in this gap, but then there's a bunch of equal highs up here, I could see that it dips down and then comes back up. But we do have a nice target here too with this volume imbalance from the weekly. Previous week highs, previous month highs up top. And what we see here is consecutive pokes down to take sell side liquidity. And then we have a structure shift here to the upside, and then we clear liquidity again and again. And so I think this one just made it equal low. We cleared out, but we have a lot of buy side liquidity resting up here, these highs. We've had quite a bit of pokes through taking out sell side. We have volume imbalance here with this consecutive fair value gaps. So we could mark this out too as an area of interest, possibly for price to retrace up into this area. This would be pretty shallow 4-hour order block. So let's see what the 60-minute brings. So in 60-minute, I just see these equal highs. These two bars here, very good targets. Very good area for sweeping too into this area. This order block is still intact here, even in the 1 hour. Yeah, last week it looks like there was a little bit of a pump up, building up a lot of sell side liquidity, and then it purged that all out, and then kind of looks like a market maker buy model where we have a big move down, then we have a couple consolidation points, another big move down, and then we have shifted the market structure to the upside. And then this is pretty classic. This is a pretty classic balanced price range, and it's called a box setup. I can't remember which channel I saw that on. I think it's AM Trades or Lincoln Trades. It was one of them. I'll have to cite it later. But when you have two side-by-side V formation fair value gaps, you'd expect price to revisit this area and then launch back up. I think this would be ideal. So if I draw that out, we have a fair value gap right here. Or even, actually, we'd use this lower one because you have back-to-back fair value gaps. Here and here, and then you'd use the average of the two as your balanced price range. This is a very good spot for price to want to revisit. You have a balanced price range here, and then you have, coincidentally, magically, you have this low put in, which actually acts as support if you project this out in time. And on top of that, you have confluence of consequent encroachment. So I think that was in the daily that occurred. You saw this consequent encroachment right here, and so this is just like a really strong area for all those things to have confluence. So I see really strong support here. I went to the 15-minute. So what we see here in the London session is, I'm not too sure if there's news this day, so that's kind of the hard part with back testing. I could look really quick. Let's see. Yeah, let me do that. I'm going to bring up Forex Factory and look at, what day is that? 23rd of 2022. Is that? Yeah, May 23rd. Monday, we have World Economic Forum annual meeting, so nothing really big. When I see this happen, you have the London session and you have highs broken and lows broken, and it's a Monday, it makes me think it's a seek and destroy type of day. Seek and destroy type of days are days where it's kind of hard to trade. You have the market want to take buy side and sell side, so it kind of ranges. If I look at the daily, yeah, we've had some low activity Thursday and Fridays. This might have been a busy week, so Monday could be another kind of a low volume type of day. But what I like to do is on the 5-minute, we're going to have the 9:30 open, and we'll have to make a decision then. So now we kind of got our points of interest. 20 and 30 opens. So we have several market structure shifts to the upside being supported by these order blocks. I would say if We have some relative equal lows here. So this is internal liquidity. I would like price to probably, let's see what happens here. We want a fair value gap. We want some, we have to get a bias where we want this thing, we think it might go. So there's obviously a gap here. So I'm thinking that it comes up and takes out either these equal highs or these equal highs, and it gets supported by this. But this whole uptrend pre-market was kind of to entice retail to go long, right? Because I think the market has plenty of reason to want to drop down, fill in some of these imbalances, and then head on up. So, but we need to see some kind of break in structure and some grab of liquidity. I think there's too much liquidity resting up here unless it just wants to tank, and then we can find a fair value gap market structure shift in that regard. So we broke structure there. We further broke another point of sell side. So they might be manipulating price here with forming relative equal highs. Right there we purge. Getting what this is called. Second, look at my notes. SFP, swing failure pattern, and this is from Lincoln Trades. If we see a spike, take out highs. So now we have some relative equal highs put in. We do break structure to the downside. We get about 50% of this gap in price filled. So we have a market structure shift. We have some relative equal highs, some more up here. I do believe we'll going to the downside. I could take a short here at this point, since we did have a structure shift and we have fair value gaps. I would just make sure it's in premium. So I'll take a fib and I'll look at price like so. And we want to see the price, I believe, come up a little bit more. So we're going to go ahead and let's look at the 1 minute. What does the 1 minute structure look like? You know what? I'm good. I think those relative equal highs are going to be attacked. I think they're going to be attacked. Let's see. That's nice. So that goes a little bit too deep into this market structure shift here is an order block. So looking back, we had a market structure shift to the upside and then to the downside. So this would be considered a breaker up here. And let's see if this continues. So still selling equal highs. It hasn't yet breached the equal highs up here. It's getting super close. I don't know if it'll leave those intact. So I'm not trying. Okay, there we go. So we get a nice purge of buy side liquidity. In this case, this could have been a 30-point trade to go long, since we did purge this internal sell side liquidity. But it looks like a rangy day. Do we have any other targets up high? Yeah, we do. Let's see. this point here, that's taken out this high here. So let's see what it gives us. So there we got a market structure shift to the downside. It is 12, so we're waiting for possibly a 1 o'clock setup. Let's switch to the 1 minute. All right, so we have an overall trend from, let's mark the open. 9:30 opens right here. If we do get in a trade, this could be important for take profit. So there's the stock exchange open. Extend this out. It's about 4 o'clock, or sorry, 3 o'clock. And so here we saw price continue up, then over the lunch hour. If I mark out the lunch hour here. So there's our lunch hour. We saw that a lunchtime high was put in. A lunchtime low was put in. So I'm going to see what side gets kind of attacked first. Looks like some lows were put in and then they were purged out. So probably a good chance that all this liquidity here will be left intact, and we could see a continuation move to the upside after all that was cleared out. What we have here too to help us with that is we have a move up. So we have two down close candles, a move up with a market structure shift. And so I'd consider this a breaker right here. And if we can break over these highs, that might be a really strong area to go long. So I consider those highs broken. That doesn't occur. I'm just wrong with my bias. Might go lower. So it looks like no trades this day. I wouldn't trade this late in the day anyway. We got power hour. Price did come up. The breaker, maybe it was right here. I'm not too sure. Still getting familiar with breaker blocks, so hopefully that's a breaker. But these after lunch trades are usually very small targets. So what mistake did I make in the morning? What did I miss here? Well, from the New York Open, our bias was wrong. Our bias was on the short side. Even though we had this uptrend in the morning, it felt like that was just a manipulation. We did have these kind of relatively equal lows, this lows forming, and we did have an area of liquidity here, this trend line. That got broken kind of couple hours pre-market. So that liquidity was swept. So maybe not enough, but after this sweep and this rejection off of this price gap, which would show up in higher time frames, I just thought we'd had plenty of room to head lower. So let's go back to 15. Let's fast forward to the next day. So no trades yet. Let's go to midnight, mark the midnight open. Switch to 5-minute. 9:25. 9:30. Okay. $9:30 open. It's right here. All right, so what do we see? Let's go back to the hourly. All right, now we have that gap. Again, we have more sell side liquidity. We have this balanced price range with the consequent encroachment, this right here as a target. So I would say my bias would be on the short side. 5-minute. Now we're looking for a break in market structure. And we want to see price kind of retrade back into the above the open, possibly into the midnight open, because we have relatively equal highs, and then take a dump after that. So let's see. We get a gap. Okay, so a break in market structure. We have a fair value gap right here. But I want to see some more liquidity taken. So we have possible entry there that we missed. All right, so mistake again is that we have a fair value gap right here occur after this pretty strong displacement, and then right there you have a great entry, although my stop, so let's go to the 1 minute. Let's see, what did that look like? So this is interesting. If we draw our eyes back, we could see that there was a market structure shift to the upside, and there's a volume imbalance right here along with fair value gap. So there's a breaker block right here because you had price break structure on the downside and then on the upside. So I guess these would serve as the breaker block. And then we have a fair value gap within a breaker block. So when you have this nesting effect, it's super high probability that price will trade up into that range. It's a good reversal point. And we can probably find more nested breaker fair value gaps. So yeah, so price broke to the upside, market structure shift with a breaker, the fair value gap, and then broke to the downside. So even on this time frame, the 15-minute, we have another breaker block right here. Right, so you have this nesting effect, and sometimes you can include the wicks, especially if there's not a lot of body in the breaker. And a lot of times it comes to the center, consequent encroachment. So this is why we backtest, so we can learn all this stuff. The other thing I would say is that, is it in premium? This is a really nice setup actually. So if I go to my fib tool, I draw from the swing high point to the swing low before price came up. It was almost in premium. That's close enough for me to say I would take that gap there. So let me erase those. So having known that in hindsight, where would my target have been? Well, it probably would have been the bottom of this gap or this low. So that being said, what would have been a possible trade here? Again, this is that gap area roughly around this. My stop in the 1 minute would be the top of that breaker block. So if I could draw a box back out, it was probably something like that, right? So I'll go back to the 5-minute. So a 6-point stop is not bad, especially when your targets are 21, that's 3.5 R, and then I take a partial here, and there's probably going to be some volume imbalances in here that I would use. like there's one right here. And then there was a consequent encroachment number, which I bet you comes into play. So let's look at the daily. That was about right here, which is 3860. 3860. That's pretty far away. It's all the way down here, 42 points. So not looking for any numbers like that, although we did say, oops. Yeah, 3860 I think would be a great test area. Very hard to see what my partial, I know where my partial would be. That's pretty obvious. So yeah, I just called this thing at about 3.4 R. Great. See if it continues to go lower. Does it get to 3860? No, it doesn't. Okay. So constant encroachment doesn't always happen. On the flip side, do we see anything here that would made us go long? Well, we're heading into lunchtime. Let's go to the 15. Price just swept this low right here. So this would be a swing failure pattern right there. That's not really a swing actually. So that's a low bar, but it's not a swing point. So I don't know. Maybe if we go to the 5 minute, we'd see a long-term swing point low. No, it's not even long-term. It's kind of hard to pick out. You know, it doesn't really attack any point of interest that I could see anywhere here to know that that would be a good turning point. I would consider a short here, and so it took out that high that we would have entered in, and then it rejected that again. So I would need to see possibly a price break below. So this is an order block right here. It's the only down close candle on a series of candles that break market structure, and it would turn into a breaker block and a really good re-entry if price trades down below it, because the order block should be supportive of price, but when the price breaks through it, it's considered breaker block, and those I find higher probability than order blocks. So it does indeed break through it, break down. And so do we have a balanced price range in this scenario? We do. Okay, so our balanced price range, there's a fair value gap on this up close candle, right here, right? This up close candle, and then there is one right here. So you take the average of those two, project that out, and so you have a balanced price range and an order block. So we can draw both of them. You have some relative equal highs here, which kind of scare me. So this would be like a scalp setup. If we do get something in here, I do think price could turn, attack this liquidity, and go up higher. These equal highs are definitely going to be a target at some point. So let's zoom into our 1 minute. And yeah, let's see if we can get an entry. I would like to get premium as well. So this one might not be something that I trade. Let's just see how it plays out. Get priced lower. We also want to do it after lunch, so we're not trading until 1. That's for sure. So right before 1, we get another market structure shift. Not really. Price isn't broke through yet, so this could be another order block. Could see price reject strongly, but I don't trade until after 1 o'clock. So we break through. I would kind of consider this move, these values here done, but I have another balanced price range. These are really killer too. They work really well. And then I have swing point high. So we expect price to turn up to get that and then attack all this sell side liquidity. So I would say like take profit here. Let's see if we get that curve. Price breaks. See it re-enter into that fair value gap. Can't do it too late in the day though. Okay, so I would short here for our first trade finally. Usually I go center, consequent encroachment. It's also at the highs, like I said. And then I would want to see price respect, I'll say the open of this candle, because I have a volume imbalance here, so I have to let price go up there possibly. And I don't want to put my stop way up here. So 4.25 points I'm pretty comfortable with. And my take profit would be probably these equal lows actually, because 4.5 R's would be great. So I'm actually in there. I want to be in there on that wick. Oh, and we get stopped out. Okay. So if our stop was above with that of, that's huge. No, I don't like that RR. That sucks. We do come up into OTE, so this 70.5 level is really great. We did break structure to the upside, but it's a little late in the day. I don't think I'd take any more trades. So let me just say testing. We call this ICT. We had 3 days, 1 trade, 0 wins, 1 loss, negative 1 R. Don't know the win rate yet. Do that at the end. So let's do about a week's worth trading. Go back to the 15-minute. And oh, okay, we had Monday, Tuesday, so just 2 days. 2 days of trading, sorry. There we go. All right. Let's move on. Midnight. Let's mark that. To the open for midnight session. Noon. Switch to the 30. Again, we had a bias heading into the week that would fill this gap. We'd come down into consequent encroachment and reject that. We'd purge out a bunch of sell side liquidity. And now we're into this gap. So I'd want to see price take out some kind of internal range liquidity before it heads up. And we're going to Tuesday, we're going into Wednesday. So this would be the bias that this would be the low of the week for us. So any kind of trade that comes into here we considered discount. So let's go ahead and fast forward to 9:30 open to see what pre-market kind of sets up for us. So midnight continues to maintain the high of the day. We purge the high of the day. Sell lower prices. Continue to sell lower prices, so we're in. Looks like we're staying in discount for a while. $20, $25, $9.30. Big push up. I think we're trying to entice people along. We did purge out some liquidity here. So let's mark this as the 9:30 open. All right, let's switch. Oh, let's leave the 5-minute. Okay, we have gap price. Okay, so we purged out this internal range low prior to the open. We had a market structure shift to the upside. We have a fair value gap on the 5-minute here. Let's see what else, what other confluence we have. So this technically was swing low that was taken out, swing high that was taken out. So this is order block here. This might give us some idea of where we can place our stops because our fair value gap is enormous. That doesn't help too much. And then I'm going to look for premium. Let's see if price re-enters this area. Okay, so at the top of that order block, let's go to the 1-minute. I'd kind of want, let's see if I go from this swing low to the swing high. So we are in discount if we consider this price to continue to move up. I do think the risk to reward, let's look at what that is, 5-minute. Yeah, I think we could attack these relative equal highs and go towards midnight open. Setup. I'd want to see price get there. I'd use the bottom of this order block, and we could tap into the top of this. I mean, the risk to reward should be pretty good. I want to get in this trade. Stop might be too tight. I might get stopped out and re-enter. A lot of times the really good plays are if this retraces up and then kind of sells itself to go lower. In that case, I might even add. I would say I'd add if this makes a pivot low and then comes back up and then breaks that pivot low and then returns higher. So let's see. So we're selling that we're going to get some resistance here, possibly come back down. And take that, but yeah, okay. So that was a nice 5-hour trade. 3 days. Guys, this is from last summer. I don't remember last summer, spring. I don't remember any of these days. So we have 1 win, 1 loss, and then 5.29. We'll just chalk it up to 5.25. Call this 4.25 R. Okay, so that's a good trade. Maybe I'll make this bigger for you guys. I don't know if you can see it. By the way, I'll be live streaming this week, starting tomorrow. So I'm going to do some back testing. It's kind of later in the afternoon. Then I'm going to go run some errands and come back later to do my analysis for the week. That I'm not going to live stream or video. I'll probably cover that again in the morning when I wake up and do the live stream. but I just want to be prepared and have all my ducks in a row for tomorrow morning. And so this would be my, I like to take 80% off here. And then with the fib retracement levels, if this is a relatively equal high and it works out, I'll sometimes go to the 0.5 or even the 0.1 when I'm feeling really bullish or bearish. So let's go to the 15-minute and see what other things we can see, because we have the, where can we see the 0.5? Is it not showing? Well, the 0.5 kind of is lining up with some of these relative equal highs. So my other partial, which I'm not going to count the partials, but I'm just trying to explain to you guys the strategy, definitely would take a partial here. And then I would think if it goes up there, a lot of times when price gravitates towards the even numbers, it will try to do, it'll dance around these numbers a lot of times, trying to get people to go long, go short, and then it finally decides what to do. But it gathers a lot of liquidity up at these levels. So my third partial, if I were to hold one, would be probably at like 997 or something like that. So let's just see how that works out. So I'd probably get stopped out break even on my partials. This did sweep liquidity, filled this gap perfectly if I were to draw a box on this. So look at that. So had I been paying attention, maybe on the 1 minute, I would have seen that this liquidity filled. So typically I have that drawn out in my charts. Be like, okay, if we have a rejection off of that liquidity and we have a market structure shift along with some other factors, I would go short at that point. And then it would have been great to target sort of my entry, right? Probably target New York open. As you can see, when price is below the open, oops, it's in discount in this case, and when it's above the midnight open, it's kind of in premium and in a space where it might want to reverse. So if we look at that, we can see that first we look at what liquidity did it purge. So if I drew a line here from this high, oops, we're going to see it purged. Come on. Purged all this liquidity up here. What is the market structure shift that occurred to do that? So it originated from kind of these two down candles and then this market. Yeah, okay, maybe these two down candles. We'll count all these 4 down candles as the range, as the what am I trying to say? The order block. So this order block of down close candles are the smart money orders that sent this price higher to take out buy side liquidity. Then once price broke down below this order block, it becomes a breaker block. So now we're waiting for a market structure shift as soon as this one, the one that originates from, trades lower, right? Once it trades lower and you have the confluence of a fair value gap, especially in the 1 minute, this could be very resistance of price. Not kind of making this up as a go. It's very standard ICT stuff. So what happened here? At consequent encroachment, or 50% of this, what was an order block turned into a breaker block. You have price sell that it's going lower, then stop out a bunch of people that were trying to short, trying to catch that short, especially heading into the lunch hour. So let's see, is it 1 o'clock yet? No, I wouldn't take, maybe I wouldn't take this trade because it's over the lunch hour, but it did work out, right? And then you do have, if I were to say this swing high to this swing low, just gonna give you guys what I'm thinking. We are in premium. So we're in premium, all these factors come into play, all this liquidity here. I would probably consider a short from here. I wouldn't trust it going too much lower because I'm bullish for the week in general, but just kind of give you guys an idea of what I would do. There's no fair value gap within this breaker, but you don't really need one. What you would want to see is the price break below this, then you have a lot of confidence to hold to this low, right? Because this becomes then a breaker, which we could trade up into over after lunch and then continue our slide down. So let's see if that happens. I'm just kind of curious after 1 o'clock what happens. So we could get some sideways price action. Looks like it's just going sideways. Kind of goes into there, breaks highs, and then dumps. So yeah, it breaks these highs. As you can see, this breaker was still pretty relevant in what price did, although it did grab some liquidity in the way. How nice by 1 tick grabs all these equal highs right here. People, retail was seeing support. Oh, and guess what? Midnight open right there, and it dumped. And so it's probably going to go a lot lower. It does one of those. Boy, what a wild. Wonder if that was a news day. Yeah. Okay, let's go to the next day. So that is Wednesday. I got just 1 week of back testing, and then I'm going to call it for the day. I don't know how long we're going here. Does it tell me? All right, let's do Thursday, Friday, and we're done. This is midnight. We're going to do midnight open. To lunchtime. Let's go to about 9 a.m. What do we got here? Let's go to 60-minute. Okay, so we have here price sweep these highs and immediately reject sweep these lows. So sweep these highs, sweep these lows from last week. So in the hourly time frame, I see an order block right here. These, I guess, I don't know if you'd count that candle actually. I got to do some more research on order blocks. I'm going to call this whole thing order block right here. Or a breaker. I'm sorry, breaker block. Oh, 1 second. My nephew singing. So at 9 o'clock, definitely had a market maker buy model on this one where it swept these lows and then made its way back up. I do think they might be using this as an accelerant to go higher. And then we have, so what we got right here, we have price break to the upside, be supported, price break to the upside, be supported, price break to the upside, be supported. So we have a really strong trend line here, which I think we could break before we can get up higher. Let me draw that out. I also use SMT divergence, which is divergence between the NQ, the ES, and the Dow. And I can't use that with trading view backtesting. I think it's a little too difficult to do. Maybe I could do it with some more screens, but Okay, so on the 15-minute we have this. Price is pretty supportive there. Let's go back to the 5-minute. So if we could see price trade into here and take some liquidity and fill in a gap, so we have equal lows here, we'd want to see it come into premium. I think that this fair value gap is really one I would eye for price to return into. Plus it offers a really good risk to reward. I'm not the best at taking these pre-market setups when there's no liquidity grab, but we do have a bunch that was created here in this trend line. My only concern is this is the overall trend line, which I think they might want to break before they bring it to the upside. So let's see if how price reacts in this fair value gap. So what do we got here? 935. Price grabs higher. All right. What does that do? Does that purge more? We just missed the move completely. So it's into our 1 hour order block. I kind of want to see what it does in the 1 minute. Let's see if price action. Okay, let's see in the 1 minute. All right, so this is our point of interest. Now, again, we can go to where did this originate from? Well, we have a fair value gap here. We have 2 down candles. So I would say price needs to break this low, and then we can use this order block, which hopefully turns into a breaker block, as a point of interest return to the midnight open, or actually let's find 9:30 open. Right. Boy, it's a really dead first minute candle. Nothing. Strange. Okay. So cool. We'd like price to come down here, trade into these relative equal lows, take liquidity, or just take profit at the 9:30 open. Let's do that template. Okay, so let's see if price will respect that. It could take a few stabs higher, obviously, as it tries to grab more liquidity and gets deeper into the order block, but we don't trust it to go very much higher. And I can continue to move this guy as you see another price leg come up to that order block, because we've definitely cleared it out by quite a bit. So we've had 1 drive, 2 drives, some equal highs. What time is it? 11:40. A little too close to lunch for me. The lunch hour can get really kind of trendy here, so we'll take it to 30. It's getting towards the midpoint of that order block, 1 hour, and it could possibly turn it into a breaker. It's getting very close to that point. That's getting super deep into this order block. It seems like it's a trendy type of day. And I just have to see how price reacts to this top level. If it does break through, you can see right at it brings it right to the top, then rejects. So we can consider this top of the order block possibly. We have 1, 2, about three or 4 drives higher into an area of strong resistance. So each one of those we can look at where we can find any order blocks. This one you could consider not a breaker exactly. Kind of hard to tell. Let's see, there's a fair value gap up here. Let's see if price breaks lower. Okay, that's nice. That's nice. I think we might have missed the move here. I don't think it's going to give people much other chance to get in. But God, I can't see a breaker. Cannot see a breaker. We go break to the downside or break to the upside. If this would have broke to the upside, that would have been nice. Okay, so that was a nice. If this would have broke to the upside, I would have trusted it a little bit more because it would have cleared out that liquidity. Now there's some liquidity resting up here and a fair value gap above. So for me, I didn't trade in the morning. I could do half R or do 2 trades in this case, but really it's got to be in premium. So I would need to take the low part of this fair value gap. Like I said, I think we might have missed the move here. This might have been the real move. So yeah, it's gonna have to trade above this premium for me to take it. Now it dips into there. It creates a relative equal high. Is that a relative equal high? Same high. 67. 67. Yeah, I don't like that. I want to see it clear that high. Okay. So here I would get in. Right at this fair value gap, right on OTE. I'd get that. I'd take that trade. Power hours coming up. I'd actually reduce my risk to 3.25, and then I would, let's see, I guess it's a little later in the day, so I just target these lows, like this one, the highest of those 2 lows for 3R. Boom, we got that. Okay, so late day trade, kind of going against trend. It's day 4. 3 trades, 2 wins. And then that is 3 point, let's call it 2.5 because we rounded down last time. So it'd be 8.5. Wait, 3? No, I can't do math. 7.5. 7.5R. Great. Day. I used to find myself back testing very fast to see how many days I can get in a short period of time, but I think you really have to take this multi-day analysis and slow things down a lot. It's very helpful. And so what if it takes you an hour and a half or an hour to do 1 week's worth of trades? I mean, take it slow. Slow down your thinking a little bit. So we're closing up on Friday. As you can see, Tuesday was the low of the week. That and price did go up higher. It's just hard to pick out bottoms that I trusted. And I've got to do better at that when I know the range is going to expand up higher. plenty of reason to believe it was going to go into that order block. I just didn't want to get stopped out. So I think a lot of that comes from sizing your trades right with 1R and just being okay with being stopped out and getting in your second level. So I had the first fair value gap, which was up high, would have been a perfect fill. But I could have been locked and loaded for a second. And if I was really wrong and price dived down, well, then my analysis was wrong. I need to revisit that. So, yeah, okay, miss out. But I'm not going to bat an eye at 7.5R. It's a Friday. I'd probably walk away and not trade for today. Let's look at, especially, I mean, if you look at the daily candle, right, you have the power of 3. It's basically, you know, you're going to have an open, and then you're going to have a move down, move up, and then a close, usually like that. So you have a candle that looks, you know, like that. Open, drive lower, and then by Friday you're going to have a move up and then swing down. So actually, at the end of the day, I might find better trades for short scalps I just had there. It was 3R, 3¼ R, so you know, first quote unquote scalp, that's not bad. It might be obvious though what it wants to do. Okay, so what we have here is relative equal highs that were purged pre-market and then purged again. So let's get the 9. Oh, we got 1 more minute. There we go. So we got to open right here. All right, so let's look at this. Let's look at the 30-minute. Let's look at this week. So we definitely broke through this order block here that we're using to get our short little scalp. And let's get a even higher time frame. Let's go to 4-hour. So on Friday, it's like, yeah, we did have expansion up to the upside. We took this liquidity. There is some, you know, structure here. There's a gap that we filled. So any point here, I could see price turning. We have a balanced price range here with this fair value gap. I'm sorry, this balanced price range would be from here to here, right? Back-to-back fair value gaps. And then, so I could see price be making its way to 6, this is Friday, 10. So we have price continue its way up. So I could say it reach higher to this point. There's also another fair value gap. Well, this whole thing, I'm sorry, is balanced price range all the way up to here. We have another one. So yeah, that's a pretty huge price imbalance. This ICT doesn't consider balanced, I don't think. He would consider it imbalanced, even though price did paint up and paint down. It's going to have a drawn liquidity for that, and you have relative equal highs up here. So I think if we don't make this trade, I'll continue the back testing tomorrow night and pick up where we left off here. But my bias would be leading to next week, another bullish day. So let's go back to the 5-minute. And what do we see? We have midnight open, New York open, huge 5-minute fair value gap right here. We have 2 of them. And we have a breaker block. So we have price break up to the higher side and then to the lower side. And so these 3 consecutive down candles, I'd consider a breaker. I'll just go from this one down. And then what do we have? We have a fair value gap right there. So I would take a long position, top of this guy with a stop right below for 1R. And our target would be Where are we? Our target would be, oh yeah, right there at these highs. So again, about 3.25, 3.35 R. Let's look at the 1 minute. All right, let's see what happens. Oh, price leaves without us. Yeah, price left without us. So what happened here? At about 8 a.m., you have a purge of all this consolidation, and then a market structure shift to the upside. Not a really great opportunity to get in long. So let's see what happens after lunch, because I don't think we've made any move here. I don't think, let's look at the 30-minute. We have a lot of relative equal highs here too. I think we'll have a continuation to the upside for these relative equal highs. Just draw these out. Some strong liquidity. Relative equal highs. Go back down to 1 minute. All right. Purge this. Yeah, nothing really yet that I can see. So highs put in higher. It's lunch hour. So let's look at lunch hour to 1 o'clock. So let lunch hour play out. Don't trade during lunch. And what we see here are some lows being put in, and then the low side purged right there. So lows are being purged. We have a bias that we have some relative equal highs in the upside, which are at 1150. A lot of times when we have a very strong move up right off the open, we see some lunchtime consolidation with a purge. We'll see a continued move up. But we need to see a market structure shift to the upside. I'd like to see a breaker block, possibly a box setup also. So let's just fast forward it to 1. Okay, so we do see price come up and break over this order block, right? This is an order block because it broke below a previous swing, and that took liquidity, and then it did it again, and then it moved up higher. So we definitely think it's going to move up higher. I'd say anything in premium here or in discount, I will take. So the volume balance is perfect. This one is perfect. I don't think our risk to reward would be too bad here because our target is pretty far away. So I'll just do even above that for 4. I'll put 1 tick below 4.5. All right, and then this thing's going to be a monster trade if it works out. 6R. If we can get it. Okay, we get tapped in. And we'll probably get stopped out. And I got to kill it at 6. I'm working with Apex Trader Funding, and they have a rule where you can't trade past certain times. Look at that. Probably kill the trade right there. Oh my God, that's awesome. 1 minute before I would kill it. That's so funny because they said it. Last trade can be at 4, I think it's 4 p.m. It might actually be later. Yeah, I think it's actually I'd have a whole hour. So that is, oh, I didn't even move my thing there. That is 6.67R. So what a great week. What an awesome week. So 5 days, 1 week, 4 trades, 3 wins. And then that last trade, wow. Really good risk reward. 7.5 plus, we'll call it 6.5. 14. 14R on the week using ICT methods. Really great. Okay, so that's a win rate of what? 75%. Cool. Yeah, and I would have held out all the way to the top. Those relative equal highs are really strong. And I mean, I wouldn't do 1.44 as partial. None of that, what also gives me confidence is any unfilled fair value gaps on the way up. So once it broke this high and retraced, it'd be like, oh shit. But still, that wasn't a good risk to reward. Then it broke above. I'm saying this in hindsight, but I tried to tell myself this obviously when in a trade. I just let it fill because I thought I was going to get stopped out, but it worked out. When you have fair value gaps like this that are unfilled, I would just hold all the way to target because especially if these become unfilled, maybe I would have moved my stop up below this pivot low just to go for like, at least having maybe like a 2R trade. That would have been fine. Keep it, but having this order block is supportive for price, just in case it wanted to retrace down. But those relative equal highs being so close, and these fair value gaps being unfilled as we approach the end of the trading day, total conviction to keep the trade on. So very, very likely, some people do back testing and they set enormous targets. When situations like this pop up, I truly do hold out for this kind of target. I mean, look how strong, look how much liquidity was resting up here. All these relative equal highs, this is the 1 hour. So yeah, 1, 2, 3, 4, 5, and then I guess you count this one as 6th. Then you got a balanced price range. I mean, it's going to try to enter up into here regardless. So let me go back to the 1 minute. I'm kind of curious to see what price does. Even as the day goes on, it keeps going higher, right? Until the end of the day. So on days like this, you could even say, hey, I'm just going to hold out until the close, like right at the close there. You would have held out and you would have got maximum R on your trade. Right there. That would have been 9.5 to 1. I'd taken a partial here and maybe left a portion on for the end of the day. It's just going to be a really strong day, really strong finish. So if I go back to the hour, yeah, that broke through. That broke through. Very nice. Okay, I think that concludes the first live stream backtest and chill session. And I'll be having more of these, and I'll be live streaming tomorrow morning for the New York Open, hopefully all week, Monday through Wednesday at least. So thanks for sticking around, and I'll see you on the next one.